Hello, Dale. Hello, everyone. So we don't normally put our videos on these webinars. Usually we're a little bit more anonymous, but today I've got a guest. So we've got our videos on so you can see who's talking to you, and you can also see the name of the person that's going to be our guest. So we're talking about serviced accommodations or holiday lets today. And today we've got Dale Smith, who's going to join us, who is an expert in the holiday let market. So first of all, hello, Dale, and welcome to the webinar.
No, hi guys. Thanks for having me. Looking forward to it.
Excellent. So what we'll do is we'll get started. We'll do a little bit of background into myself and into Dale, and then we'll start talking. We'll get into the content of holiday lets. And the plan for today is not necessarily to sort of for me to be the interviewing Dale or getting questions, getting answers out of Dale. The plan is to have it quite conversational. So we're going to go through discussing different points of holiday lets. I'll jump in, Dale will jump in. And then at the end, we'll have a bit specifically about source. So we'll probably let Dale go because he's a very busy guy. I saw him yesterday at the Landlord Investor Show. He literally didn't stand still for more than 10 seconds on the phone. Very, very busy. So we'll let Dale go just before the end, and then we'll talk a little bit further about source after that. So let's get into it. So first of all, a little bit about me. So my name is Chris Kirkwood. If you've seen any of the webinars that we've done before, I usually host a webinar about once a month. I am the franchise director at Sourced. Now, in my time at Sourced, well, before Sourced, actually, I've founded, run and grown multiple different businesses in different business sectors. The sort of niche that I found is starting a business from absolute scratch, growing that business to a point where it's systemized, it's working well without my input, and then selling that business on to somebody else at that point. I really enjoy that sort of startup mentality, that entrepreneurship that is involved in starting and running businesses. Now, in terms of property, I've been involved in property for over 10 years now. It's difficult to say exactly when that started because, I started dabbling in property and making loads of mistakes in property when I first started getting into property well over 10 years ago. And in my time in property, I've done deals from 55,000, bog standard, £55,000, sort of 2 up, 2 down properties in Salford, up to being involved in projects with a GDV valuation of £150 million. Over my time and over that sort of financial spread, I've executed many, many different property strategies. So, you might hear different jargon about serviced accommodation, about HMO, about lease options, about commercial conversions, about new build. Every one of them I have had some involvement of with adding those properties to my own portfolio. So when it comes to sort of a broad spread of understanding property, that's why I'm the franchise director. Now I run the franchise side of the business, and basically at Source, we have 150 franchisees spread throughout the country, all executing different property strategies. And it's our responsibility as their franchisor to make sure that they're successful. So we stand behind them. We provide training, support, leads, funding, all kinds of things to make sure that they make money out of property. We'll get into a little bit more about that later on. Right now, let's talk about you, Dale. So over to you. Do you want to go through these points?
Yeah, absolutely. No, thanks, Chris. So quite similar to Chris. Background in property, so around 15 years in property. Started out in residential, so we're a family business. Always invested in residential buy-to-let property. Started around 2006 in that sector. I bought my first buy-to-let just before going off to university, and kind of once I came back, got into commercial world, started to build up the residential portfolio, moved into commercial property. Before then stumbling across holiday homes in 2016. So we acquired our first holiday home in 2016, renovated that to a high standard, started to let it on the online travel agent sites, Airbnb, booking.com, started to see what revenue we could generate from a holiday let versus the more traditional buy-to-let investments. And that really got us hooked ultimately on what we do today. So from that first holiday home in 2016, launched that in 2017. We've grown the group now to 6 customer-facing brands. We've got 200 employees there. We actually have just short of 300 employees across the group, and we've grown pretty quickly. So we turned over just under 7 million this year. We're on track to turn over close to 25 million for this year as well. And we've got aspirations to keep on growing as we move forward. Everything we do is property related. So obviously, We'll talk about Host and Stay today, which is our holiday let and short let brand. But across our portfolio of businesses, we do everything from legal services to residential and commercial construction to interior design and then ongoing property management. So holiday let management, we also do residential management, commercial management, so a full suite of property related services.
So looking specifically at Host and Stay, what kind of growth are you expecting to see from Host and Stay from last year to this year?
So we ended last year on just around 500 properties. We doubled that in the year. So our objective last year was to add 20 new properties per month. And across 2022, we're looking to double again. So our goal is to get to 1,000 units by the end of this year. We're currently around 600. And yeah, trying to get to 1,000. Our goal then following year is to scale that to 3,000. So we're looking at a couple of different channels that allow us to do that. Everything we've done so far has been organic growth. And acquisition is something we're working hard on at the moment to really fuel that growth across the UK. Obviously, from a holiday let perspective, last year was an interesting year, which I'm sure we'll touch on a little bit as we talk through this. But we're very much kind of benchmarking ourselves where we were in 2019 from a guest perspective on occupancy, nightly rates, etc. Just because the last 2 years have been so different. But we're still hugely bullish in terms of what the holiday let and service accommodation market has in store for the years ahead.
Yeah, absolutely. We'll get into that a little bit more later on. Bringing you back to 2006, I mean, that was quite fortunate that you bought your first property in 2006, obviously, right, with the credit crunch just about to happen in 07, 08. Did you do the same thing as I did when you first got into property, where you knew you wanted to get into property and you just sort of did something? You just did something because you didn't really understand. You didn't have the knowledge that you have now, obviously. So you just found something to purchase. You purchased it and then just sort of saw how it was going to go.
Absolutely. So that still have that same 2-bed apartment in my hometown. To be honest, still owe the same amount on it today as it did then, because it's just on interest only mortgage still. And to be honest, it doesn't make an awful lot of money, Chris, just as a buy to let. You look at it and it's there. It's probably worth a little bit more now than what it was then with the ups and downs. But it was something to get started. And in terms of that journey, we've done the whole purchase, refurbish, refinance, roll it into the next one, stop doing that when the recession hit. Looking back on it now, wish I'd bought more during the recessionary period. All those things that lots of have been through. Moved into commercial property. Fantastic, love commercial property because versus everything else, it is, if we're looking at as investors in terms of the hands-off, let's say, approach, commercial is the closest you're going to get to do that and still get a good return. And very different to the holiday let side, which is heavily, hands-on, massively operational. But the reason I love the holiday let side is I'm big into marketing and I'm big into financials, and the holiday lets allow you to really drive both of those two on a daily basis. You're looking, right, how can I drive more bookings? Is my pricing right? And actually with small little 1% manipulations actually can change your profitability by big percentages. And that's the bit that I really love about the holiday let and short let side versus the more traditional investing route.
So let's get into that a little bit more now. So we at Source, let me just go through very quickly some of the growth that we've had. Obviously, the growth that Dale has had with Host and Stay has been incredibly impressive. If you come to our website, you've got a number of different brands, and I guess just like you guys at Host and Stay, that's one of your brands that works in an ecosystem of brands, so they all sort of support and encourage growth in each other. Very similar to Source. We have 4 different brands. It starts off with a franchise for us. The franchise is an opportunity for you guys to get training and support and property leads. And then if you want to do a project yourself, you can then move over to Source Capital. Source Capital is an FCA regulated peer-to-peer platform. So we can offer in-house bridging. This is only available to franchisees. The last deal that Source Capital funded was actually just last week, and that was just over £5 million raise. And that was a commercial conversion from an office building into 55 flats, and that's down in Taunton. You can get all details of that on the Source Capital website if you wish. We've then got development, because not only do we teach people about property, but also we do property ourselves. We've got a lot of different projects going on right now. I think we've got 12 projects that we're currently in planning for, which again, you can see on the Source Capital website, because all of our projects get funded by Source Capital as well. And then if you're looking for property yourself, or if you're looking for more education, all of our webinars, all of our podcasts, all of everything that we do is held on the property side of our website. So you can go there and you can find out more information, but you can also see some of the properties that we are selling or our franchisees are selling, to be more accurate. So we started about the same time as you actually at Host and Stay, funnily enough. January 2017 was when the idea of the franchise business was conceived. The model was launched in September. We then very quickly launched the peer-to-peer, the Source Capital brand after that, got FCA approval to trade, hit 40 franchisees within a year. We then JV'd on a £150 million development in Manchester, which is on Regent Plaza, over 500 flats being built at Regent Plaza in Manchester. We got approval for ISA and pension funding. So if you're looking to invest in tax efficient ways into property, you can do that through Source Capital by using your ISA or a pension. We then started an average of raising about £1 million per month in January 2020. And all of that money that we were raising around that time was going to fund franchisees' projects. We had a development pipeline at HQ of 8 live projects in April 2020. Again, very, very similar growth to Dale at Host and Stay that, we look to double that every single year. We then hit 150 franchisees, again, because what we offer, what we have is very desirable, because it's not just about the training, it's about the ongoing support to make sure that you put that training into practice. We launched a property app. If you guys haven't downloaded the property app, please do so. You'll be able to see lots of properties that are for sale by our franchisees. You can select the strategy, you can select the location. I'm just going to move my screen around a little bit. And then we received FCA direct approval. So previously, when we were trading through Source Capital, we were doing so through a third party. We received direct FCA approval in December 2021. And that means that we are masters of our own destiny from a Source Capital point of view. And we're looking to build out, to launch, to make available many more different products for investing in property rather than just the one that we have at the moment. So today, obviously, we're going to be talking about holiday lets, as we've said before. We're going to be talking specifically about how to maximize your earnings. Now, the one thing that I want to say before I hand over to you, Dale, is holiday lets are just one way of making money out of serviced accommodation. Holiday lets and focusing on the leisure market is very well known. Everybody's heard of Airbnb. Everybody's heard of that specific strategy for making money out of short-term lets. However, one of the points that I want to make is that there are also corporate renters. There are businesses that are looking for exactly the same thing. Now, we have a franchisee who he actually targets the corporate sector when it comes to short-term lets. One of the things that he does is he selects his areas where businesses have got sort of head offices or training hubs or regional offices, like insurance companies have big regional offices. What they tend to do is they tend to bring in members of staff for training, or they bring in members of staff from across the world, or they bring in contractors to work at those hubs. And they're always looking for business. Now, one of our franchisees, one of the most successful ways that he's got of making contact with those businesses is that he actually walks around the car parks of the local hotels at 11 o'clock at night when all the workers have gone back to the hotels, and he takes a pen and a piece of paper with him, and he notes down the names on all of the vans or the sign-written cars in those car parks. The next day, he calls every single one of those companies. Now, if there's 2 vans in the car park, he's going to say to them, look, you guys, how many people did you have staying in that hotel last night? Would have been about 2 people per van. One room in that hotel is £100 a night. That's £400 that you've spent on that hotel for that one night. Now, I've got a flat just down the road that can accommodate 4 people. And that flat to you guys, I would rent to you for £250 for one night. Now, I'm saving you £150 per night. And therefore, the business is happy. The workers are happy because it's a nicer environment to be in rather than a hotel. And obviously, he's happy because he's making a good margin out of it, because he's built his margin. He's created that pricing structure based on a way that he's going to make some good money out of it. Now, businesses are very, very keen for this kind of thing. They use hotels all the time just because it's very vanilla. It's very easy to use hotels. But if you get in there, if you build relationships with local businesses, there's a lot of money to be had. There's a lot of business to be had. There's also a lot of construction projects going on around the country. And these construction projects, again, look for a lot of accommodation in specific areas to bring in workers to fulfill big construction jobs. Now, holiday lets, there's a huge amount of money to be had. Dale's going to talk to us all about that. The point that I want to make is that holiday lets and focusing on the leisure market can be quite up and down depending on the location of your property, but don't forget about the corporate stuff. The corporate stuff is more difficult to get into. It's not as systemized as Airbnb, but it can be a very, very big income generator for you. So as we move through, Dale, because some of the content on these slides, it sort of ends up with your content. As soon as you want me to move over to the next slide, just let me know.
Cool, good stuff.
So tell us about the host and stay model.
Yeah, so I suppose it leads in nice and when by the nature of where we operate in the main at the moment, so host and stay, we operate across the UK, but we're heavily focused in the north because we're based up in North Yorkshire, a place called Saltburn, just between Middlesbrough and Whitby. So we're naturally tailored to the tourist market, but we do also get corporate and contract. And I think following on from your point, Chris, it's about thinking that location is going to drive that ultimately. Vast majority of our stock is rural and coastal. So 90% plus of our market is holiday makers and tourists. So whichever locations you're looking at are going to determine who that core client is. And you want to hone in on that from that point of view. I think the next thing to think about then is what end of the market you want to operate. So for us, our host and stay strategy is we want to be in the top 15% of the market. So everything we do around property quality, the interior design, the nightly rates is focused about hitting that top 15%. And we've looked at that. What we don't want to do is be kind of pulled into the masses, if you like, of mediocrity, let's say, where your rates are squeezed, you've got more downward pressure on rate, you've got more competition of people operating on the market. We wanted to elevate ourselves and say, right, let's focus on the top end of the market. Let's really make a difference in terms of the quality of properties that are available and make our mark from that point of view. If we wind the clock back to 2017, when we first started off, the reason we did that is there was lots of average stock in the market, in the holiday let market, particularly in places like North Yorkshire, which were good from a staycation point of view, but not best in terms of quality of what people had to choose from. So we wanted to make our mark and make sure host and stay was one of the premium players in the market. That means that our rates are reflective of that quality. So if you take our average 2-bedroom property in the host and stay portfolio, generates just over 30,000 per annum. Average 4-bedroom just over 40,000, and our average 5-bedroom is actually over 50. Our average 3-bedroom over 40,000, average 4-bedroom over 75, and our average 5-bedroom over 90,000 a year. So we're generating some significant income and revenue numbers from those by hitting that higher end. When we also came to the market, we wanted to have a flexible length of stay. So a lot of our traditional competitors, a Sykes, a Cottages.com, quite traditional in their methodology, Monday and Friday changeovers. Someone can stay Monday to Friday or Monday to Monday or Friday to Monday. So it really limits the clients that you can attract from that. We know how transient people are now. Kind of one of the biggest things when we had our first holiday, I was still in the corporate world. I knew I couldn't go away Friday to Monday. I had to be back in the office 6:30 on Monday morning. So I was staying Friday night, Saturday night, and then had to go home. So we wanted to really play on that and be different to the other competitors in the market, which is where, this millennial approach to a traditional market was our philosophy. So how do we make things really flexible for our guests and actually flexible for our owners as well?
Can I ask you a question about that? Because therefore, if it works perfectly, that's a great model, isn't it? Because if you get somebody that leaves on Monday and then you've got somebody else that wants to check in later on Monday afternoon, then perfect. You've got, well, for that day, you've got 200% occupancy.
Yeah.
However, in most cases, I guess you forego a little bit of occupancy to have that model, because if everybody knows that the checkout day is Monday, then there are no other options to that. But if you accept somebody's going to check out on Monday and the next guest that you get a requirement from is going to check in on Thursday, it's quite difficult to fill that Monday to Thursday. So do you find that hits your occupancy hard?
No, it doesn't, Chris, to be honest. So what you'll find is a lot of people have got very different schedules, and that person who wants to stay, I don't know, a Tuesday and Wednesday night because they're retired and they want a little 2-day trip away somewhere, and they can because they have no fixed schedule, then they'll pick up those bookings. Whereas with our competitors, they don't offer that service. So their only option is to use someone like us who actually does offer that. And there's probably, if you speak to a more traditional agent, there's two schools of thought. If they're only letting weeks, let's say, they've only got to find 52 customers a year, which I understand that concept. For us, we average 6 to 8 bookings a month across our properties, depends on size. For me, we're getting 6 to 8 additional customers on our database every month versus our competition. So our growth rate is 6-fold. The more customers we've got in the database, the more opportunity we've got to drive direct bookings. So, and this is where it comes down to, it's looking at what your approach is. If we were going after the corporate market, the beauty about the corporate market is you're going to have lower rates, but they're going to be staying for longer. So your operating costs are going to be lower. But there's a balance in each of those. Our model on the tourist side is we believe, and our numbers demonstrate, that someone staying for a shorter period of time is willing to pay a higher nightly rate because they've got a budget for that 3-day stay. So if they want to spend £1,000 for 3 nights, they might actually only want to spend £1,000 for 5 nights or 7 because they've got £1,000 budget. So would they rather go away for 3 nights and stay somewhere exceptional, or go away for 5 nights and stay somewhere okay? So what we found is our ADRs are significantly higher and our gross revenues are significantly higher. Yes, we have higher running costs because you've got more changeovers, but the significant increase in revenue far outweighs what the increase in running costs are as well. And there's different markets, different approaches for the stock that we have that does target contractors and corporates. The price points are not as high, and we focus on longer stays, which I'll touch on as well in a second. And it's getting that balance ultimately. But back to your original point, it's the location that you set is going to be key. And it's kind of looking and saying, which strategy do you want to apply? Because both of them, neither are wrong. It's finding what's right for you as an investor and what location you want to operate in.
And there's been a lot of talk about service accommodation over the last couple of years. You know, since nobody could go abroad, everybody holidayed in the UK, and then we heard a lot about the increase in the weekly price of service accommodation units.
Yeah.
Do you think that increase or the increase that we've seen, do you think that will sustain over the next couple of years? Do you think that's here to stay, that people have sort of rediscovered the UK?
I think so. If we look back now, our occupancy tracking this year is very much in line with 2019. So we're back to, what the actual staycation market was. And we were seeing growth. So 2019 was a better year than 2018 for us, and 18 was subsequently a better year than 17, although 17 we were really just getting started. So occupancy is moving back to where it was. This year, I think, will be interesting because I do think a lot more people will perhaps travel abroad this year than even they maybe would have done pre-COVID, because they haven't been able to for 2 years. So for me, foreign travel has got that pent-up demand of people wanting to find the sun because they haven't been able to. So I think we're going to be into next year before we truly see what the market is again. But in terms of nightly rates, we're starting to dip below what we were tracking at last year. So if we look at months like April and May, we were still on par with 2020 rates when we were coming out of lockdown. That's starting to dip away now, but we're having to be more price conscious because people are comparing a 3, 5, 7 night stay in the UK with the same going abroad. And for anyone that's traveled internationally lately, the planes are full again. So we are, from a UK market point of view, we're in full competition again with the foreign overseas operators. So we have to be conscious of that. Last year, we didn't have the competition. Arguably, prices probably got too high and they were unsustainably high. I think they do need to come down, and we'll see those fade away across the second half of this year. Going into next year, we'll be in a much more stable position of a balance on rate and occupancy.
Do you find you're having quite a few conversations with people that own properties that want to turn it into serviced accommodation or want to use it as a holiday let, and it's in the wrong location, it's the wrong kind of property, it doesn't work, and it just doesn't hit the sort of key niche that you need to for serviced accommodation? Yeah, definitely, and I think that comes back to that approach. It's if you're somewhere, let's take Whitby, which is a hotspot for us. That is out and out a tourist destination. We get little bits of contract to corporate, but nothing really to speak about, and that market just doesn't fit that. If you go to somewhere like Middlesbrough, Stockton, for us that would be pure contractor market. You're not really getting any tourism in that market, and it's probably a lower value corporate market. You move to somewhere like Durham, fantastic city, you've got every cross section, tourism, parents staying to visit students, students visiting to visit students, contractor market, corporate market. So there's kind of you've got the core tourism, the core corporate contractor markets, then you've got these nice larger towns or cities
probably where you've got good universities, that you've all of a sudden got a good cross-section of market. York, as an example, another great city for that. Harrogate's a good cross-section city, good for tourism, good for corporate, good for contractor. So the location is definitely key to that. But you have seen some people wanting to try and hit the SA market with a property that isn't quite fit for purpose. And obviously we've seen a lot of people move from traditional letting to service accommodation to try and make that work, just because of the restrictions that we've seen come in and continuing to come in the buy-to-let sector.
So one of the points that you've put down here is stunning professional photography. Now that's I've seen the images that you've got that we're going to show everybody a little bit later on. I think you've actually been very kind with the images that you've chosen, because I browse Airbnb all the time and I see what kind of images people put onto Airbnb. And it's absolutely shocking. But do you use somebody specifically for your interior styling?
So in terms of professional photography, we have 3 photographers who are allowed to shoot our portfolio. We will, if an owner is coming on board with us and they've already got photos, it'll go through a vetting process, and we may allow them to use it if it hits our criteria, but we'll always caveat that our income forecast is based on our photography. And if they use theirs, they may not hit the projections that we forecast. As I said, 90 to 95% of the photography you would see on our Host and Stay website has been done by 3 photographers who are allowed to do it for us across 600 properties. And
is it possible to overstate the importance of photography for the short-term market?
It's the key, 100%. It's the absolute key. It's back to, if we're all looking down Rightmove, probably wrongly as investors, we're still going to click on the property that's got a good first image, even though arguably we should be clicking on the one with a terrible first image or very few images or no first image, because potentially a better opportunity. But that image is what gets you the click. Those next 5 images, you're making the decision of whether you want to book that property or not. And I think that is the key in terms of this model and this market. Is we're effectively an e-commerce business, but we're an e-commerce business selling photos and descriptions until the guest stays, because that's all they've got to go on. So that first image, those next 5 images, the quality of those is going to determine whether you're truly successful or not. And people might be doing okay with amateur images and say, well, I'm getting bookings and this, that, and the other. I guarantee you go and get professional bookings and focus on those first 5, you'll increase your revenue 100%.
Have you used that as a growth strategy to look in areas that you want to supply management and select people that are already listing their properties but have got inferior images and descriptions?
Do you know, we haven't at the moment. We've one of our growth strategies, because we mainly do 4 and 5 star properties, we typically look at our competition and look at quality properties that we want to bring on for management, and approach that way. But we haven't done it the other way, but it's probably a good point actually to consider.
So the next section is about why owners would use you. So at Host and Stay, what exactly do you offer?
So our point of difference is that we are full management. So you saw on that first screen, we employ just under 300 people now across the group. Vast majority of those are employed in the Host and Stay business, and the reason is vast majority of our housekeepers are employed by us. We don't outsource if we don't have to outsource. So anything in our core markets, our housekeeping is delivered by us, our maintenance is delivered by us, our guest relations, our owner services are all based in the northeast of England. We don't outsource, we don't offshore. For us, that's a key point of difference versus anybody in the market at our type of scale. And the reason we do that is we want to control quality ultimately, and we want to be able to say to our owners, look, when you're dealing with Host and Stay, the buck starts and stops with us. We don't have a subcontractor to say, all right, your cleaning wasn't very good. Well, that's a subcontractor, go speak to them, or for us to blame that subcontractor. It sits with us in our team. And that's key to us in terms of us growing now across the UK, is how we scale that solution. But we're passionate about that because we feel like that's what's been missing in the holiday let and short let management market, is a company that actually can deliver the on the ground service. The easy part in our industry, easy or not, is generating bookings and the marketing side. That can be done. The actual true art and the difficult part of what we do is making sure that property is clean to standard. Is it ready for the next guest? Is it being maintained? Is it being QC'd? Is the health and safety right? All of those things are kind of the kind of nitty gritty, the non-glamorous stuff, but is essential if the property is going to be successful. And we've really driven that as our USP.
I imagine the operations role at Host and Stay is a stressful role.
Yeah, most certainly. And because we're growing as well, we often have the conversation, our business model would be certainly easier if we were happy with the number of units we had and we were just ticking over. But when we're trying to double every year, then, you're restructuring all the time to make sure you've got the infrastructure in place to keep facilitating that growth. But there's lots in the short let and holiday let market at the moment in terms of scaling through technology. That's right to a certain degree. We've seen lots of recent IPOs in the short let market as well, mainly obviously in the US market, tech driven, tech fueled, but someone's still got to clean those properties. Someone's still got to maintain those properties. And I think too many players in the short let market are thinking about the tech side and growing the front end and not thinking about we still need more people on the ground to actually make sure those property are ready for the next guest coming in. And for us, that's the key. That's the bit that we see ourselves growing through that route.
Talking about that and the positioning that you have with your clients, as you say, is the buck stops with you. You are the go-to for your clients.
Yeah.
I imagine you've got one eye keenly on the regulation that's being talked about by government.
Yeah.
So what are your thoughts on that? Do you think it should be regulated? Do you think it's worked with the HMO market? And how do you plan to pivot when it happens?
It's an interesting one. So I sit on the board of the STA, so the Short Term Accommodation Association, and that's one thing. We actually had a board meeting yesterday afternoon on that in terms of the call for evidence from the government. We've actually been working with Scottish government and Welsh government on that, and ultimately, obviously, Scotland have gone down the route of licensing and planning. Wales looks like going down the route of planning and higher taxation on second homes. England, obviously, we're yet to see where it will go. I'm definitely an advocate that something needs to be done. At the moment, it's too easy for an individual to list a property on Airbnb and let it, and there's no check of whether that property is safe for a family to go into. And that's always the key concern for me on it. And I think we need to do something to make sure there's an element of due diligence either gone into what that property provides and the health and safety around it, or that the owner of that property has at least had to say, I have checked this, this, and this. I think for us, any property being listed with host and stay, we ask for everything you would need to let that property from a buy-to-let point of view. So we want a gas safety certificate, we want an EICR, we want an EPC, we want PAT testing, we want a fire risk assessment, we want Legionellas. So all of those items are a prerequisite for us. And we get some owners saying, oh, well, I don't actually need all those for short letting by the letter of the law. No, you don't. But with what's coming down the pipe in terms of some form of registration and or regulation, the last thing you want to do is to have your property closed for 3 months while you get all those in order, and then you sit in the queue waiting for your property to be signed off. If you've got all of those now, and there's no reason why we shouldn't, because it's the right thing to do, then we know we're in the right position. Because it's also a business risk to us. If we have several hundred properties closed for a period of time because we're waiting for them to get all of their certificates in order, it's a revenue loss to us as well as the owner. So we want to make sure we're ahead of the game. And ultimately, I think it's the right thing to do. We need to make sure that the standards are right and the health and safety aspects are right as well. Obviously, the platforms, the likes of Airbnb and Booking.com are going to view it slightly differently, because any barrier to listing a property is going to hinder their volume, and their business model is stacked up on the volume of listings. So speaking from a personal perspective, I do think it's the right thing. If licensing came in, again, I would probably be an advocate of that, because I think it means we know the properties that are listed have been vetted. And ultimately, if you've got a family with small children in a property, we want to make sure those properties are right and they're as safe as possible.
Great. Okay, to move on to the next slide. You happy with that?
Yeah, perfect.
Great. So finding the right opportunity. Do you want to go through what you see as the best ways to find serviced accommodation opportunities, and then I'll go through some of the stuff that we use and we use for our franchisees.
Yeah, absolutely. So I think certainly location first of all. So I think it's looking and choosing right. Am I going to primarily go after leisure and holiday makers, or am I going to go after that corporate market? That's then going to determine where do you need to be looking. So I often get the question, right, what do I need to be looking for the perfect holiday let? Well, being in England, if it's by the beach with a sea view, it's dog friendly, it's got a log fire, it's got good interior design, you're ticking all the boxes for that to be a highly successful property, 90+% occupancy, high rates all year round, etc. Those are kind of the absolute, ticks in the box. If it's a corporate, well, you rightly said earlier in terms of vans and car parks, where is there that there's a high volume of construction going on? So how many cranes are there on the skyline is probably a good indication of whether that's an area worth investing in from a corporate point of view. How many, again, you could probably liaise with local councils and constituencies to identify what investment is going into the area from a construction perspective, because that with it is going to bring a high level of subcontractors coming from outside of the area in. And in terms of finding those, we do a lot, same way as we would do for buy-to-let and commercial. We're always got our right move alerts set up for different properties coming through in different markets. We would be looking at certain size of properties. I often get asked how many bedrooms. Well, no perfect answer. If you said to me, what's the best property to have in Whitby, I'd be saying, right, focus on the larger properties, less in the market, higher barrier to entry, more opportunity to get stand out and monopolize the market. Whereas the one bedroom and two bedroom market is about 75% of the market across the UK. Easier entry point and more people operating in that market, but more demand. So it's really getting the balance. If you're going to have a 1 or 2 bedroom property, I would say, right, you need to look and say, how am I going to get stand out from the crowd? Because it's going to be a crowded market. If you've got a 5 bedroom, 6 bedroom property, less crowded market, executed properly, really good opportunity to take a bigger chunk of the market in that. And you've got AirDNA on there. We have AirDNA. We operate that for all of the areas that we operate in and the UK as a whole. If it's a market that we don't have a property with our own data, then we'll rely on that AirDNA data with some of our own to really assess it and look at what revenues and occupancies we'd be looking at.
So for those that haven't heard about AirDNA before, obviously, I would imagine that most of the people on here have heard about Airbnb, but do you want to just explain what AirDNA does?
Yeah, so AirDNA effectively scrapes the data primarily from Airbnb. I think it brings Verbo into the mix as well, and it essentially assesses that market area, how many properties are in there, how many bedrooms per property. So you could say, right, I just want to look at, let's use Taunton as the example, Chris, that you touched on. Circulate Taunton, how many 1-bedroom properties are there? It'll give you an idea how many are listed. It'll give you an idea of average nightly rates, average occupancy. And it also gives a particular area a market grade. And what that market grade is, it's effectively looking and saying, one, what the overall booking opportunity is in that market, and then compares that relative to the number of properties, those nightly rates, to essentially say, right, is there enough opportunity in that market for it to be viable or not? So it can give you a quite good, quick snapshot to say, right, is it actually worth pursuing or not? And again, I would always take that with a pinch of salt. We have a lot of properties on AirDNA. Some are bang on accurate in terms of the revenue stated, and some are not. So you always got to look at it and go, right, that's going to give me a guide. What other information can I pull in to actually make an informed decision?
So for me, I completely agree with everything you've just said. For me, there's two different aspects to it. The most important is demand. So wherever you're going, wherever you're looking, whatever kind of property that you're looking to buy, it's establishing that there is going to be a demand for that particular type of property. And we use AirDNA just exactly the same as you guys do, because it's the best place to find those comparables. And you get a map view on AirDNA. You can look at individual properties that surround. They might be on the same street as the one that you're looking at. So you can see over the last 12 months, what their rental income has looked like, what their occupancy has looked like. So it's a fantastic place for finding out the comparable data. The second thing I'd say is what suits you as an individual who's going to buy a property to use as serviced accommodation. It not only has to satisfy the demand of the people that are out there, but presumably you're going to use it sometimes as well, or it might not just be a business that you're planning to create. So I actually know 2 people that own serviced accommodation that are literally on the same street as each other. One of the units is a small but very cute cottage, just got 1 bedroom. It's just made for couples. And just on the other side of the street, you've got this 11-bedroom sort of converted barn. And clearly the converted barn is for, you know, big groups of people, families getting together, big parties, that kind of thing. And on the other side of the street, the one bedroom cottage is just for couples. Now, are the two people that run, I know the two people that own both of these units, and the feedback from, and the amount of activity, the amount of time it takes to look after those units is completely different. Because if you've got a party and you've got, you know, 22 people that are staying in this barn, it's going to be quite loud. It's going to be raucous. You know, you need to make sure that the neighbors are happy with that kind of, with what's going on there. There's going to be a higher repair bill, right? Because stuff is going to get broken far more often out of that 11 bedroom property. And the one bedroom property, they literally don't do anything, right? Somebody manages the changeovers for them. It's generally older couples that come in, older couples that move, that are the tenants, and they don't really get involved with it. It just sort of sits on its own. So it's got to suit you as well. So if you're looking for completely hands-free, if you're looking for, because obviously the management company is going to be there, but if something dramatic happens and something dramatic needs repairing, you probably will need to get involved. So you've got to look at what suits you. But I'd say overall, it's all about that demand. When you find a property, get yourself onto AirDNA straight away, find out what that demand is, but then take a step back and think, well, AirDNA can tell me the Airbnb stuff, which is generally the leisure market. Let's take a step back. Let's think about the corporate market. What is around here from a corporate perspective that I can then go out and build relationships with?
Yeah.
So the criteria that the properties will need to meet, like we said, we talked about demand, we talked about parties, we talked about just specifically looking to set up for couples. And just look at what bookers are looking for on the previous screen as well. We looked at like the individuality of the property. So if you've got something that, you know, really sticks out, it's a very individual property. You know, it might be a period property. It might be, like you say, have a sea view. Then obviously that's going to be your front image, isn't it? And that's going to draw people in to then look at your file. Anything to add to that?
No, I think you're right. That's the thing we're always looking for. If I go and look at a property, or if we're doing one of our own projects, in my mind always is, right, what is that first image going to be? Because that's the hook ultimately. So it's what are you doing to create something that first image is going to be a showstopper, basically.
Absolutely. So looking at the letting strategy, this is your data. So over to you for this one.
Yeah, so what you'll see on the bottom left-hand corner there is very much the seasonality of holiday lets. So it's, you know, the tourist holiday maker side of things. So you'll see a big peak for the half term in February, and then also Easter, kind of an elongated peak across into mid-June, July, August. A dip away across September, October, although we have seen September and October last year carry on the kind of summer months. I think a lot of people who perhaps don't want to go away in the school holidays starting to come out in September, October, you then have half term again. So we're seeing less of that dip across September, October. It'd be interesting to see what that looks like for this year. And then December, so Christmas, the New Year are going to be massive periods as well. So what this demonstrates is just that seasonality to think about. So when you've got a holiday let, you're not going to be at the same occupancy, the same revenue every month. You're going to have your peaks and you're going to have your troughs. It's kind of that making hay while the sun shines is one thing that's going to be key. And also I'll always say to new owners coming into the market, you've got to view everything on a 12-month cycle. Because of that peaks and troughs, until you've run a first 12 months, you're not going to actually know how the property is performing. And also, if you think when the property first goes live, because I'll always get asked, when's the best time to launch? There isn't one ultimately, because for that first 3 months, you're trying to generate last minute bookings. So you might need to be keener on price than what you would do if you'd run into those first 3 months. So actually, until you've run 2 years and you've had a first full 12 months, you've took bookings from 1 year into the next year at a higher rate, you're not going to get a true picture of actually what the property can do and can perform. And we'll also always forecast over a 4-year period, because we'd expect a property to increase in occupancy year on year as it becomes established, increasing number of reviews, star rating, review rating, performance on online travel agent sites. All of those are going to have an impact on the number of bookings that you generate, and they all need time ultimately to be optimized and to bed in. It's not, it's not an overnight switch on and make money straight away or sustain profitability straight away. It needs to be viewed over a period of time. Every single property is in its own right, its own little business, and needs to be treated that way. And it's also back to that point of, over time, you're going to build up a core database of people who rebook the property that you can remarket to as well. So what we also do is those short-term bookings in the peak season in our locations that can sustain it, where we've got corporate and contractor travel as well. We also look at medium-term bookings. So for us in host and stay, the bulk of bookings will always be short-term, high ADRs, but we'll also try and layer in some medium-term bookings. So typically, whether that be 28-night bookings up to a few months for mid-term stays. So again, that could be rehousing somebody that's going through an insurance job. It could be a corporate booking. We might actually have a corporate booking for 3 months across the winter, but they actually might only want to utilize the property Monday to Friday, which means we can then re-let Friday night, Saturday night for them to come back in on a Monday and actually get 2 bites at the cherry, which is the kind of perfect scenario for us, because our guests coming in to travel for weekends, from a tourism point of view, again, paying higher rates, and then we can fill that midweek lower occupancy in the winter with a longer contractor booking. So this slide really is to demonstrate, look, if you're looking at that holiday let tourist market, expect some seasonality and peaks and troughs that looks very much like this, but think about how you can layer that with some medium-term bookings, which probably plays into our next slide, Chris, which I think is then looking at where we can generate bookings from the different channels as well.
Let me just jump back onto that. Apologies, my fault. One of the questions that I was going to ask, based on that, based on the graph that you have there, do you then work with your owners to schedule in when maintenance is done on the properties, when refurbishments are done on the properties, to select the least busy times of the year, therefore nobody's losing, you're losing the minimum amount of money that you...
Yeah, absolutely. So we would always say, we know November is always the quietest month of the year. The November, first couple of weeks of December, that 6-week period is when we would always advise getting anything done. So any work that needs done, longer refurbishments, etc., always should be done in that time period, because it's going to be your lowest value nightly rates and your lowest occupancy as standard. So it's where you're gonna lose the least. And also January typically is the biggest booking month. So post Christmas, post New Year, everyone looking at what they're going to do from a holiday perspective, January is always the biggest booking month of the year. So any properties coming on, any refurbishments, we would want those upgrades rephotographed and relisted for January, so we can make sure we maximize that opportunity and that opportunity window.
Right. Okay. Interesting. So this is the next slide.
Yeah. So, following on from that, short stays, medium stays, and luxury stays. So we actually list on over 60 plus different platforms, which flows down into, several hundred, if not several thousand aggregator and affiliate sites. So anyone getting into short stays, you've got the big 5 in terms of online travel agents for short stays. So Airbnb, Booking.com, TripAdvisor, you've then got Expedia and Verbo. So anyone looking to generate bookings, whether that be for corporate or for tourism, every property should be listed on all of those 5 sites. Again, you can do that individually. If you're trying to manage multiple properties, then obviously I recommend using a property management system to manage those and to list on those channels. We then also tap into the medium stay market. So properties that are going to lend themselves to medium-term bookings, contract to corporate, rehousing, etc. We would also list on Rightmove, on Zoopla, and on the market. And what we do when we list on those sites is we take an average rate for the next 3 months and we multiply that by a 70% occupancy. That gives us our monthly rate that we'll advertise that property at, and we'll then try and generate an inquiry on that basis. And we've had some good success with that. It's something we're looking to do more with as we continue to grow the portfolio in more areas as well. And then our higher end properties, so our 5-star plus properties, are listed on Marriott Homes and Villas, and then also Plum Guide as well. Marriott, obviously massive reach globally. Again, properties have to be vetted to list on those platforms, so they need to be of a certain standard, need to be of a 5-star rating, but will attract higher value clientele, higher value bookings, and ultimately that OTA mix, it's about eyeballs, and we generate around 30% of our bookings directly. Our aim is to get that to 50% by the end of next year. And we've got a lot being invested to deliver that, so that we're getting a split of 50-50 between our own host and stay website and the OTAs. But anybody getting into shortlets, we built our business initially on listing on the OTAs. And then bit by bit, we've built the host and stay brand and built the host and stay platform. And there's always a place for the OTAs. You'll see a lot of property managers kind of OTA bashing, as we would say, in terms of, you know, they take 15% and X, Y, and Z. But ultimately, those guys have got global reach. If we can acquire a customer via booking.com and pay booking.com their 15%, if we do a fantastic job as a brand, that guest should be booking with us directly next time, not booking again with booking.com. So we've also got a job to do. If we just rely on the OTAs and we don't do our job offline, then we're only ever going to be able to rely on the OTAs. So it's certainly worth thinking about anyone getting into this. Even if you've only got one property, still get your own little website set up. It doesn't need to be anything special, but get your own website set up, have booking capability there. There's lots of low cost to entry now versus what it was several years ago, that you can get that in place and operational. Every guest that stays with us in the property, we have little cards that say, thanks for staying with us, leave us a review. But if you're looking to book again, book directly and get 10% off. The email communication that goes out after the stay pushes them to book directly with us for a 10% discount, because that 10% discount is better than paying booking.com 15%.
Yeah, it's a really good point as well. Like I was expecting, I wasn't expecting you to do the little cards thing, and that was the point that I was going to make afterwards. That, you know, even if it is just leaving a card somewhere, you know, if you have a couple of touch points with somebody, they're much more likely to remember that. You know, if you say, if they, like you say, if they've had a great time in your accommodation, and they see that they can get 10% off next time, then, you know, they're going to remember it, especially if you have those different touch points. So, you know, your business is clearly very, very heavily systemized. But that doesn't mean that it's just automated emails that are going out, right? If you make it a little bit more personal, you put something in front of them, you're much more likely to really hit them, so that they actually go through that process. And obviously, if you give them the 10% off, you're still making an additional 5%, because, like you say, Airbnb charges 15%, right? So,
yeah. And typically a booking that comes through our host and stay website on average is a higher value than a booking that comes through an OTA platform. So people are also willing to spend more money directly than they are with an OTA. So even after a 10% discount, we're probably retaining more than just a 5% variance as well, because people will spend more money direct.
That's really interesting.
And this is probably the biggie, and the real point of this slide, I guess, is to say to anyone looking to get into shortlets, is to go into it eyes open with how much time and effort goes in, especially if you're used to, you know, buy to let or certainly commercial investing. So obviously we'll vary by property size, but we did some research on owners on our host and stay platform who still do the housekeeping and maintenance themselves, because we have that option. We'll generate the bookings, but they then can still look after the property themselves, and just how much time goes into facilitating that, and how much time we actually spend responding to guest queries, guest communications, managing the linen and laundry, etc. And typically around 50 to 90 hours per month is what it takes to manage one property. You multiply that up by a number of properties or a larger property on average, the time on that's going to go up. And what you've got is with Airbnb and booking.com, they will generate you those bookings, but that's just the start of the process. It's then looking and saying, right, how do you systemize, or how do you scale those other bits, the on the ground bits that the kind of the OTAs and the bigger operators in the world kind of gloss over, but are the actual nitty gritty of really making sure your business or your property is going to be successful in terms of the housekeeping, in terms of linen, in terms of the maintenance.
And it really is an immediate commitment, isn't it? Because if you go through if you think of doing it yourself and you go through somebody like Airbnb, you are rated on absolutely everything. You know, how quickly you respond to a message, you are rated on. And everybody can see that your metrics before they decide to book with you. So if you can see that somebody, you know, responds within an hour, and you have another property that you're looking at, and you can't make a choice between the two, and the other person responds within, you know, a day, you're going to take the person that responds within an hour. And Airbnb makes all of that information available to you. So you might look at 50 to 90 hours per month and think, yes, I can put that in, but it's in selected hours that I choose. It sort of doesn't work like that, does it? Because you need to be on it all the time.
Yeah, absolutely. And it is those response times play into the algorithm and conversion metric for where you're going to list on the OTAs. So it's absolutely key. If you're the fastest at responding, your property is going to show higher up the rankings. If you're generating more bookings, you're going to show higher up the rankings. So all of that plays in. It is absolutely key.
Yeah, great. Again, this one's yours.
Yeah, so really, this is saying interior design is absolutely key. So this gives one example. So within our group of businesses, we have an interior design business called Styled, and Styled has come off the back of so many of our host and stay owners acquiring a property and not knowing what to do to actually get the best results. So how do they maximize revenue? How do they maximize occupancy? The interior design is going to be key. And again, points to that. What are those first image? What are those first 5 images? And is your interior design going to mean that you've got that and you can generate conversion? And the little example we've got here is just a difference. We've done a number of these different case studies across different size properties. But ultimately what we see on our host and stay platform is a property designed in the right way, functional, looks good, will always generate more revenue than a property that is done to a lower standard or not with that same thought and consideration. And I'll often say to an owner, let's take a 2-bedroom property. Our average 2-bed property in Whitby generates just over 35,000 per annum. If that property is not being designed right, it can still do well, but it might generate 28, 29, 30,000 per annum. Well, that £5,000 across 4 years is 20,000. They could have invested £10,000 and they've gained 10,000 because you can furnish properties for £3,000, £4,000, £5,000. What happens if you invest 10,000 now? What does that look like over 4 years? Are you going to get more great reviews with better design that's going to bring you more bookings and have more demand, which means you can raise your prices? There's lots that goes into that, but it's just really saying, look, think about what that design needs to look like. Is it going to be functional for the guest? And visually, is it going to give you the impact that you want? Because that's what someone's making a decision on. And probably as we've seen in HMOs, we're definitely seeing it now in the SA market as well. Kind of lots of very similar designs. So it's kind of looking and saying, what are you going to do differently? Don't just look at what everyone else is doing and do something similar. Be brave and go for standout. Do something a little bit different because that's what's going to catch the eye of someone looking to book. And that's the key.
And the interesting thing about the 2 examples that you've got here is they've both got the same occupancy.
Yeah,
it's just the ADR that's changed. So it doesn't mean that if you spend that £10,000 on making your house look better, it doesn't mean that it's going to get used 31 days out of 31 days, and therefore it's going to have more wear and tear. It just means that you're able to put that ADR up, and therefore you're operating a much more efficient business. Yeah,
absolutely. And what I'd always say as well is, whenever I'm looking at forecasts and talking to owners, I'll never get hung up on occupancy and rate. For me, it's all about what does that property have the potential to generate across a year. So it's all about gross revenue, because I can make a property be 100% occupied. I just bring the rate down the same way I can get really high nightly rate, but my occupancy is going to come down. It's about finding that sweet spot and that balance, which is that the supply and demand factor. What we want to be doing always is looking and saying, right, testing the water on price. Well, if I get the price too high, the booking pace is going to slow, right? So I need to lower it. If the booking pace is too fast and I'm getting, if I'm fully occupied in 3 and 4 months' time, I've sold the property too cheap. We want that sweet spot lead time of when someone's booking and when they're staying to find the right balance.
So these are the images that I think you've been too kind on. I appreciate it. They're both your images and it's both the same room. And the point that you're making is you've got a professional photographer in there that's considering light, that's got a great camera and that kind of stuff, versus somebody who on the left hand side, have they taken it with an iPhone?
Yeah. So you think image on the left with an iPhone, portrait, the space, the design and stuff is still nice, and you can still tell that looks like a nice property, but it doesn't show it in its best light. It doesn't really show it off and showcase it. And then the difference obviously on the right hand side with professional photography, right ratios. Each of the different booking platforms will have different image specifications. So actually an image used on booking.com is going to be different to Expedia, going to be different to Airbnb. those things are worth considering, because again, it's how do you get your listing to 100% accuracy. That will impact your bookings. But definitely I see so many images, and actually good properties, as you said earlier, good properties, but with poor imagery. What would the difference be spending several £100s on a professional photographer? That's going to generate you tenfold in additional bookings versus thinking, you know, that's an upfront cost. So yeah, I can't stress enough, professional photography is absolutely key to this business.
And, you know, for me, it's a strategy, right? Because we booked a skiing holiday next year. We used Airbnb to book a skiing holiday. It's in the French Alps. And I was browsing through Airbnb, and I was specifically looking for something that had poor photography, because I know the kind of standard of property that I want. And I've been to the ski resort before, so I know where the nice properties are. But if I find something that's got poor photography, I know that the price is going to be lower than the other ones. So it's actually a strategy. It's great for me.
Yeah.
It's terrible for the owners.
Yeah.
Right? Absolutely terrible. And if you look at, like I said, I think you've been really kind. If just go and have a look for HMOs, look on Spare Room. For serviced accommodation properties, look at Airbnb. Look at the quality of images that are on there. And people book with their eyes. So you're going to have a far better return if you do it. Go and have a look on Airbnb straight after this webinar. Just look at the poor imagery that people have on there, and think about your own desirability about going to stay there versus the image that we've got on the right hand side here. So it cannot be overstated how important this stuff is.
Yeah.
So financing options, and actually we've had a question from somebody that's watching about mortgages and whether you can use a normal buy-to-let mortgages. So properties being used as buy-to-let, can you just immediately convert that into serviced accommodation and start using it as serviced accommodation? Now, bridging finance, if you're familiar with bridging finance, again, as long as you're open with them, what you're going to be using the property for, usually bridging finance won't have an issue with using it as serviced accommodation. But when you move over to mortgages, you have to be accurate. You have to tell people, you have to tell the mortgage provider what you're going to be using the property for. Now, if it's a previous buy-to-let product, what you might find is that they've got a serviced accommodation product or they've got a HMO product, and you'll just need to move over from the buy-to-let product over to the serviced accommodation product. Serviced accommodation has become so big over the last 2 to 3 years that there are more products on the market now than there were 2 or 3 years ago, because mortgage providers know that they're going to be able to make money out of these products, and therefore they put more of them onto the market to satisfy the demand, because they're looking at demand as well. Now, the rates of those serviced accommodation products that are available on the market, you'd have to go to a mortgage broker or a commercial broker, a commercial finance broker, to talk to them to find out what is available at the current time. Now, in terms of tax advantages, I guess you have this conversation with your owners quite frequently when you're selling the benefit of using the property for serviced accommodation. But do you want to go through some of these? Do you want to go through some of the stuff that you're aware of?
Yeah, I mean, so first thing, if it's going to be used as a holiday let, you're going to, or even serviced accommodation, ultimately they fall under the same tax brackets, furnished holiday letting. So if you search furnished holiday let, HMRC, you'll find out, you'll find a page where it outlines what the requirements are for it to be classed as an operational holiday let. Off the top of my head, I think it's 100 and has to be available or operating, for 105 days a year. These are some of the things that are being lobbied through government at the moment in terms of what changes may come in England and rules around number of days available, etc. If you've got it classed as a furnished holiday let, then the things that go along with that is your mortgage interest relief obviously can be offset. So whether that's owned personally or limited company still applies. You're going to have capital allowances which can come in. So on initial purchase, as long as there's not been a capital allowance claim already on that property, you get that surveyed by a capital allowance expert. There's going to be part of the purchase price that you're going to be able to get back for fixtures, fittings, etc. And then obviously if you do any upgrades, you're going to be able to claim capital allowance as well, and also on some of your furnishing items too. So there's some good tax advantages with that. Business rates, if you're operating as a serviced accommodation or a furnished holiday let, really the property should be operated on business rates or registered for business rates. If you've only got one property as a holiday let within that one legal entity or held personally, you're going to be able to claim small business rate relief unless the property is substantial, 15, 20 plus bedrooms. You're
pretty big, right?
Yeah, pretty big. You're going to fall under the threshold to be classed as small business and actually be exempt. So you're going to go from, I see so many people operating holiday lets as on council tax and paying council tax when they could be registered for business rates and not paying anything and having the couple of £100 a month saving there. The only side you'd have is you have to pay for your waste disposal separately, but that's a small cost versus what your monthly council tax would be. And again, you know, operating as business rates is the right thing to do, and we're going to probably see tightening of that, I would have said, as the changes come into play from government. Pension contributions. Go on, sorry, Chris.
No, go on. You finish this, then I'll jump in afterwards.
Pension contributions, so holiday let income, different to buy to let and commercial, can be used as pension income. So again, whether that's coming in, if that's coming into you personally, your buy to let income is not classed as trading, so can't be moved into your pension fund. With a holiday let, it can be. Probably the other thing worth saying on here as well, one thing to consider is VAT. So because holiday letting is classed as a trading business, if you've got multiple properties or one large property, if your revenue from that is going to go above 85,000 per annum, you're going to need to be registered for VAT, because that income is vatable across a certain level. So one thing to think about.
I chose not to put that on the tax advantages page.
Yeah.
The pitfalls to look at. But one of the questions that we've actually just been asked as well is about whether you hold. You mentioned an entity, so whether you hold that property within an LLP, within a limited company, or whether you hold that personally. Now, my perspective on that is, however you organise that is going to be relevant to all of your other tax affairs. And the correct answer to get for that would be from your accountant, because it's probably only your accountant that understands how your entire tax ecosystem works. And it has to be taken into consideration with everything else that you do. So for what is correct for me might not be correct for Dale, might not be correct for you, or we might not go about organising it in the right way. So you have to have that conversation with your accountant.
Yeah, absolutely.
And inheritance tax relief is another one that I didn't click on previously. But a huge amount of tax advantages. But exactly right. The main pitfall that you need to look after is the VAT. Now, when it comes to VAT, whether you're doing holiday lets through owning them yourself, whether you're doing them from a rent to rent perspective, you know, there are ways that you can organise your business in order to mitigate for the potential VAT issue when you hit £85,000. Again, that is a conversation that you need to have with your accountant. And at this point, I would definitely point out that one accountant is not equal to another accountant, especially when it comes to property. You need to make sure that you're having that conversation with somebody who is very, very familiar with property. We actually use an accountant, and a lot of our franchisees use an accountant that's from sort of up your way in the northeast. For us, we use a guy called Andrew Potts. He's fantastically well educated when it comes to property issues. So make sure that it's not an accountant that you've known for the last 20 years and he's looked after different businesses that you've run. Make sure that your accountant knows about property. Some other pitfalls. I mean, systemizing, and I guess, you know, this is one of the key factors that you guys have taken advantage of, and you do very well, systemizing in order to establish that growth. Because if you are spending 50 to 90 hours on one property in a month, you know, very quickly you're going to run out of hours if you haven't systemized that and you've started outsourcing it. That's a really important point to take into consideration when you're planning your growth. And also, don't buy cheap. We're not necessarily talking about the property, but I'm talking about the internal stuff within the property. Don't buy cheap. You know, I had 4 HMOs on the go at one point. I spent a huge amount of money on furniture, which was from a specialist HMO provider at the time. And I spent a little bit less money, but bought all the furniture from IKEA. The only property that ever went wrong was the stuff that we bought from IKEA. You know, furniture broke, things were, you know, needing to be replaced far more frequently than the more money that I spent on getting specific HMO furniture. And I know that this company actually sells SA furniture as well. I'll put the name in the description a little bit later on. But don't buy cheap. You know, do it correctly, do it well, do it right, do it once, rather than having to do it time and time again. When it comes to relationships, you know, I would strongly advise that you concentrate on those relationships, exactly like you guys have done with the portal, so people can book for a second time, where you're going to save a 15% booking fee from Airbnb. But also you're looking at those local relationships to build relationships with local businesses to get more tenants in, get more corporate tenants in, just get more demand, get more eyes on your property. Like you say, you guys use 60 different portals to advertise your properties. Do as much as you possibly can. So key takeaways. There are 4. If you want to jump in at any point, Dale, Just go ahead. First takeaway, location, location, location. And when you've got that location, establish demand based on that location. Number two, interior design as your point of difference. You know, make sure that your property pops. I know that it's sort of overused, that term, but in terms of those two images that we had on the screen at that one time, one of those images popped. The other one was quite drab, was just in the background, could quite easily be scrolled past. Number three, dynamic pricing. So do you want to explain what you mean by dynamic pricing?
Yeah, I think, and that's back to when we first started, we had kind of seasonal pricing. We had a price for low season, a price for mid season, and then a price for high season. We didn't manipulate that by day of the week or by supply and demand. Back then, there wasn't necessarily easily accessible tools to do that. Now there are multiple tools on the market, and quite a lot of cost-effective tools as well that can help you set your rates. And that is, again, going to be key to maximizing your revenue. So a Tuesday night and a Wednesday night is going to have a different price point in the market than the Thursday. Saturday is always probably going to be the most expensive in the market. Making sure you're actually being able to manipulate those prices almost in real time, in line with what the supply and demand is. So yeah, several different tools in the marketplace. Well worth the investment if you're operating something at the moment and have not got a dynamic pricing tool in place.
And be aware of events, right? Have you totally seen the price difference in SW19 in London when Wimbledon's going on? The peak for those 2 weeks of Wimbledon is absolutely phenomenal. But you know, imagine you operated service accommodation in your location and you had like the equivalent of Wimbledon there, and you forgot to take advantage of it. You know, that's a mistake you would only make once.
Yeah, totally.
And then for just to, you know, really hammer the point home, professional photography is so incredibly important. Like I said, go and have a look on Airbnb and just look at whether you want to stay in that property that you find on Airbnb. So find areas, consistent demand, structure your properties in a tax efficient way. You need to talk to your accountant about that. Do your due diligence. So AirDNA is a great tool. If you've never heard of it, use AirDNA to do your due diligence. And then after that, work hard on your occupancy. So for me, the one phrase that I always have in my mind, no matter what I'm doing within property, is what else can I do? So not only have you listed it on Airbnb, but you've also put it on booking.com. What else can you do? Then you start walking around hotel car parks with your pad and your paper to take advantage of the local corporate business. What else can you do? You then might go onto LinkedIn, and on LinkedIn, you'd put HR department in the town in which your property is, and you'd send emails through LinkedIn to introduce yourself to all the HR departments, because if they are booking stuff for their staff, it's probably being done by the HR department. So again, just building up your local connections and always be asking yourself, what else can you do to build that? So in terms of partnership options, do you want to go through these?
Yeah, absolutely. So as we touched on right back at the beginning, obviously our host and stay business, we are looking to continue to grow organically across the UK, but we also have a franchise and license option as well. And we're looking for essentially property entrepreneurs that are looking to build a business in the short let sector, and we're looking to work with those partners. So, you know, again, perhaps you're already a sourced franchisee and you've sourcing developments for clients, doing some of your own stuff. Our license option allows an operator to operate under our host and stay brand with all of our systems in place, our training manuals, and our support to operate a host and stay license in a certain territory. So our host and stay franchise and license options are one of the ways that we're looking to scale over the coming years. And we've got a couple in place already, and looking to grow that. So anyone that's interested in kind of working certainly alongside what you're already doing on the source side and the funding side, we've got the tools in place to really help support that management solution. And obviously, aside from that, we do offer management services across the UK as a whole as well, predominantly based in the north at the moment, but bit by bit, we're working our way south.
Excellent. I do have one more question that I need to ask you before you shoot off, because I think this is the last slide that you're going to be helping us out with. You mentioned the dynamic pricing. What tools do you use to determine the dynamic pricing? Are they in-house or are they outsourced?
So we use a system called Beyond Pricing, is a dynamic pricing tool that we use. There's also Price Labs is another one in the UK market. There are some other options. I think Wheelhouse is another one, but predominantly US market. But there are several different ones in play now, and there are some property management systems that will have certain elements of dynamic pricing built in. I think from a system point of view, I can see someone's just said, what's OTA? So OTA is online travel agent. So Airbnb, Booking.com, Vrbo, these guys are all OTAs, online travel agent sites. You've got property management system. Your property management system is you're going to be your central hub where your property is going to be listed, where you're going to manage your calendar, where you're going to manage your guest communications. In the past, you would have had to have had a channel manager that sits on top of your property management system, and the channel manager connected to all of the different online travel agents. Now, vast majority of the property management systems have a channel manager built in, and they'll already list to the key OTA suppliers. So if you've got a handful of units, you've got a property management system, it's going to probably connect you to Airbnb, to Booking.com, to TripAdvisor, to Vrbo. If you want to take what you're doing to the next level, you're probably then going to need a TripAdvisor to connect to the other 20, 30, 40, 50 channels that might get you the extra 1 or 2%. We use a property management system called Guesty. And with Guesty, we also use Rentals United as our channel manager. Guesty now only worked with bigger companies in the past. They now also have a solution for individual operators with just one property.
Excellent. Thanks very much. You've managed to clear out all of the questions in a short space of time as well. So good job, well done. That's brilliant. Really appreciate your time. Look, I'm sure you're very busy this afternoon, so we'll let you shoot off now. I'm just going to cover a couple of other things.
Cool. Lovely.
But thanks very much. Thanks very much, Dale.
Really enjoyed it. Thanks for having me, guys, and I'll speak to you soon. All right.
Cheers. Bye-bye.
Cheers. Bye-bye.
Okay, so as he shoots off, let's talk a little bit more about Sourced, and obviously we have a tie-in with these guys at Host and Stay. So for our Sourced franchisees, working with Host and Stay is actually something they can do without having to purchase a franchise, without having to get involved with Host and Stay on a commercial level. However, if they did want to take it further, they could, and they would get reduced prices for collaborating with Host and Stay. We at Sourced, we're actually a very strong network of over 160 people based throughout the UK. And we, as the franchise, offer our franchisees a number of different things. So like I mentioned right at the very beginning of the video, come on board as a Sourced franchisee. We give you property training. Now, serviced accommodation is just part of the property training. We give you a spectrum of property training, including commercial conversions, flips, buy-to-lets, new builds, serviced accommodation, HMO, lease options, everything that you can think of. Our strategy and what we try and provide with our franchisees is a full understanding of what is available in property. We then work with the franchisees because it's a franchise, so we have a 5-year business relationship. We have support people based around the UK, and with the support person, that franchisee can work with them to come up with a plan for how they can navigate their way through property to best suit them, best suit their financial situation, best suit their personal situation to make money out of property. When they get to the point where they want to do a property themselves, we can also provide up to 100% funding, which would be the funding of the purchase price and the refurb cost to allow them to get to that profit margin. It's making that profit margin accessible out of big property deals that they can do. This is an example of one of our franchisees, Chris Richardson. The first property that he did was a 14 flat conversion from a commercial property to a 14 flats. That was the first ever property that he did. We worked with him on that. We helped him out with that, and he made a handsome lump sum at the end of that project. We also have a lead generation system, and this lead generation system works in a number of different strategies. They're exclusive to us. This is our system, and we feed those leads across to our franchisees directly into their CRM, which we provide for them to manage, for them to organize, for them to check out to see whether it works. If franchisees want to sell deals, we've also created an app, a property selling app, which is available on Android and on Apple. And it's got access to over 100,000 investors. So if somebody finds a property, doesn't want to do it themselves, they can sell it onto the app. They can advertise it for free because they're on the franchise, and then they can find that investor and they can purchase that property. The training schedule is comprehensive, and not only is it face-to-face training, but it's also online training. So it doesn't have to come to a location. You can do that training from the comfort of your own home, 24 hours, 7 days a week, whenever you want to. And as many training courses as possible are available online as face-to-face. The only ones that aren't are the kind of training courses where legislation and regulation changes frequently. So for example, in tax and accountancy, it's not available online because regulation might change, and we want to make sure that our training courses are all very accurate. Sorry, excuse me. So looking at the costs, the franchise investment. So to be part of a national brand, to have a huge amount of training, to be able to come to us with JV opportunities, because we JV with some of our franchisees if it's a project that they don't want to do on their own. A tried and tested business model, access to our peer-to-peer funding platform, a network of over 150 franchisees. We've got software, we've got deal calculators, we've got legal software, we've got documents, we've got compliance training. You know, everything that you're going to need in property is available under one banner with us, and that costs £12,500 plus VAT, and that's for a 5-year term. That's not renewable every year, that's for a 5-year term. And then there's a monthly charge, and for that monthly charge you get a certain number of leads, you get a dedicated support person, you get implementation days, one-to-one meetings with your support person, and they're not capped. You can organize as many of them as you can. You get access to the online training, you get a sourced email, again, legal documents. We've actually gotten sourced auctions, which is something that we've just started this month, which is available to you. So if you want to sell a property in auction, it can be done via sourced auctions, and that's a fully automated process. You've got help with due diligence. We've got a tier system to make sure that you've got the right level of support that's coming to you based on your experience in property. Marketing support and information resources, £245 plus VAT per month. We've then got a huge amount of plugins. I mean, the whole package that's available at Source is absolutely phenomenal. We've got a huge amount of plugins that you can choose to pay for, whether it suits your business or not. And all of these are cheaper than market rates. So by being part of this ecosystem, you get not only a huge amount of stuff thrown in up front, but you get a huge amount of facility to then, as your business grows, you might have different demands. We've thought of that. We've selected these as different plugins. Two of these, for example, one is Loop, one is Land Insight. With Loop, you get a 30% discount just for being a franchisee. With Land Insight, if you've ever seen that, you get a 50% discount, again, just for being a franchisee. With sourced auctions, we partner with SDL, and this is all under the banner of Sourced. Basically, you get a 2% paid to you within 7 days of that auction finishing, and that's paid directly to you, and that's your sort of finder's fee for putting something through the auction. When it comes to maximizing the franchise, you know, it's totally up to you. All of this stuff is sitting there waiting for you to take advantage of it. There is obviously, you know, a proactive element to the support. So the support will contact franchisees if we haven't heard from you for a while. But essentially, the more you do, the more you take advantage of it, the more benefit you will see from it, whether it's capital, whether it's group Zoom calls, whether it's one-to-one support. It's all there. It's waiting to help you establish your business in the property sector. So that's the end of the presentation. Dale was fantastic. We use a lot of that information in our service accommodation training, but our service accommodation training then lasts for 2 days. So we go into a lot more depth when it comes to the specific strategies and structures of the service accommodation training. Let me just have a look through some of the questions and answer some of the questions. How do you spell Gusty? It's Guesty. So Guesty. Property management system. So I think Dale covered that. It was Guesty and Rentals United that those guys use. And another thank you. So my pleasure, guys. It's great to get Dale on. We'll do this a little bit more often where we get guests onto our monthly webinar. But thank you very much for attending. Thanks for spending your Wednesday afternoon with me. And keep an eye out for the next webinar, which will be next month. And I will speak to you soon. Thanks very much. Bye-bye.